The put-call ratio. What is going on, guys? Welcome on into the TC Trading Channel. Today we are talking about the put-call ratio, okay? And we're going to be talking about why this indicator can be one of the best indicators to look at when it comes to the big picture and when it comes to the contrarian trading view. So to keep it simplified, the put-call ratio is calculated by dividing the number of traded put options by the number of traded call options. And a put-call ratio of 1 indicates that the number of buyers of calls is the same as the number of buyers of puts. But don't think that that 1 on the put-call ratio necessarily is that even line in the sand. We tend to see the ratio roughly at 0.7, indicating that more calls than puts are being bought, as we have a bullish bias over the long term, and traditionally we see more investors and traders buying calls than puts. Think leap options, so longer term calls, right? You have a lot less people buying longer term puts than you have people who are buying longer term calls, because we know that the market over at least the history is biased to the upside in the long run. And so that's why that 0.7 is more of that middle ground. When you see, a put call ratio higher than 0.7, that tends to tell you that we have a lot more put buying or more than normal, and below 0.7, more calls than normal being bought. Now, there's a lot of places that you can go to get a put call ratio. Now, one of those places, and we'll cover it really quick, is actually going to be over here on the Fear and Greed Index. If you were to look at this from CNN Business and you scroll down, a couple indicators down, you'll see the put call options ratio, and they take a 5-day average. Now, these numbers, you're going to note, could be different depending upon the chart you're looking at, who exactly is creating the chart, how it's calculated. Just look at 1 or 2 of these sources and identify the trends. That's what's useful here, okay? Don't go and say, oh my gosh, CNN's chart here is completely different from, CBOE's and this and that. You're going to see differences. And of course, they're calculating a 5-day average, which is, I think, useful kind of for a broader scale, bigger picture, week to week, month to month, year to year, use of this put call ratio. So what we like to look for is spikes. And what we're going to do is we're going to dial into some of these spikes, and we can see them a little bit better here on this chart. So we'll utilize this chart right here. And this is showing us so far 2022, or at least the most of this, the back half of this chart is 2022. Now, why we use this as a contrarian indicator is because when we see a spike in the put call ratio, that's saying, hey, we got a spike in put buying, right? Spike in fear. People probably going, oh my gosh, market's going lower, I got to get puts. And we know that that's not always the best time to buy puts. The time to buy puts is when everyone's feeling good, because your risk reward is so much better. Now, it could go good for longer and longer and longer, but the risk reward at least is a lot better. When we get these sharp corrections or sharp pullbacks, could it go lower? Yes, and there have been many opportunities where it has. But at the same time, those tend to be good buying opportunities, bigger picture. So go back to this substantial spike. The highest level we saw here on the put call ratio this past year got up to 1.1 5-day average. So a lot of puts being bought relative to calls, actually substantially more puts being bought than calls. That was on June 16th, 2022. Head over to our good friends at TradingView, which we're going to come back to in just 1 second here. We'll stay here for a little bit. Let's try to find that June 16th. Okay, let's zoom in. Can anyone point out where that June 16th date tends to be or is? Guys, that June 16th spike in the put call ratio was not the lows, but it was 1 day, as I zoom in, was 1 day before the bottom, at least for now, on the S&P this year in 2022 was. It was this day right here. So that is when we saw the highest in terms of the 5-day average of the put call ratio, a spike in the put call ratio. And guess what? Pretty much rock bottom. So that put call ratio tends to line up pretty darn close to some of these bottoms. And of course, the same can go for a spike to the downside. When we see a very strong spike to the downside in that put call ratio, that could be a really nice indication of potentially a top or a short-term top on the markets. Now, let's find some other highs. You'll see that actually July 15th or July 14th, July 15th was another spike here in the put call ratio. And then, of course, actually towards the end of July as well. So let's go look at that time frame. So July 14th, July 15th, guess what, guys? Where are we? Right here. July 13th and 14th right here was another short-term, actually, bottom. It was a higher low relative to this low. But again, that was a dip in the markets that provided a really good opportunity to go long and to play the opposite side of that put-call ratio. Then we saw towards the end of July, which actually happens to be this little dip right here. That's where we saw it spike up again. And then, of course, we've seen that the put call ratio as of late has started to come down a little bit as we're seeing some more strength, or actually a lot more strength in the overall markets. Now, we're on TradingView right now. We're going to leave a link to TradingView in the description box of the video down below. Reason why is because on TradingView, if you were to type in put call, here is where things get very, very interesting. You can actually look at a ton of put call ratios across pretty much whatever you want to look at. So you can look at the S&P or SPY, QQQ, SPX, Tesla, the VIX, Apple, VXX, Meta, all these different stocks. And then, of course, you can go down. There's some other different put call ratios right here. So there's a put call ratio for equities and indices from CBOE. Let's take a look at that. So this is not the prettiest of charts. Let's be honest, it's not. But it's very, very useful and can be helpful. So I like to kind of look at the Fear and Greed Index from CNN Business, their 5-day average of the put call ratio. It seems to be pretty simplified. It's pretty easy to read and digest, and it gives me a really good picture of what's going on. But these put call ratios are also very, very useful, and you can look at individual stocks, which can be very, very helpful to your own trading and investing of individual stocks as well. Now, what you'll note is that bigger picture, right? Really, since the end of 2021, we've been seeing higher lows, higher lows, higher lows on the put call ratio, indicating that overall, big picture, we're seeing a lot more people buying puts than calls this year relative to, let's say, last year, okay? Or if you zoom out, however long you want to look out on the time span. Now, this is a chart that's very, very spiky, okay? But what you'll have to watch and what you'll need to know is that the higher the spikes, the better the opportunity in the shorter term to potentially buy that dip. And obviously this spiked up many times actually, and we didn't see a bottom really until that mid-June time frame, which was actually the highest spike on the put call ratio up here towards just over 1.4 that we literally saw in the short term here from CBOE's put call ratio calculation. So it's very, very useful here. Now, of course, you're seeing in the shorter term, you're actually noticing like a trend, lower highs, okay? Even though we're seeing these higher lows, we're still seeing lower highs in the shorter term, okay? So the past couple of months. And what does that tell us? That tells the past couple of months, the market's actually bounced up a good bit. We're starting to see a little bit less put buying and a little bit more call buying, relatively speaking, which can be useful, okay? Now, you can also go over here to the put call ratio and we can type in put call and go to SPY or QQQ or IWM or individual stocks. Let's go look at, for example, Tesla, okay? And see Tesla. Now, I want to zoom this out past couple of years and get a better view of this chart. And okay, so 2022 essentially on Tesla begins and is this span right here. Now, this is a great indication to look at when it comes to the bigger picture. And what do we notice? Well, this right here, this week of August 1st, we saw really, we got down back close to a 0.5 on the put call ratio at one point. We finished the week up here towards 0.8 on Tesla. But what happened? Tesla was actually very, very strong the first week of August. And we saw a lot more calls being bought. And then guess what happened? Tesla pulled back. So playing the opposite of the put call ratio actually tends to be a better way to trade than playing with the put call ratio, at least in the short to medium term when stocks get overbought or oversold. So it's another indication, another indicator to add to your arsenal, such as, let's say, the RSI and things like that. So pairing up the put call ratio being really, really strong or really, really skewed to the call side with an overbought stock could be a really good indication to go short, right? And pairing up a put call ratio that's skewed up to the put side with an oversold stock could be an indication to buy the dip or go long, right? And that's what I think it's the most useful for, okay? It's another tool. But again, look at this. August 1st was where we saw the put call ratio, at least the past couple of months, down to lowest levels we've seen on Tesla. And what are you going to see on Tesla? What are we going to see? We're going to go to Tesla. What are you going to see? Guess what? August 1st, Tesla popped up over $900 and then sold off to finish off the week, and then bounced actually after we hit down to like $9 or $840. So Tesla sold off almost $100 from the highs to the lows in just about a week because the put call ratio got super extended to the call side, and we saw a lot more greed take hold And that was an opportunity to go short. And if you zoom into even a shorter time span, what you're going to notice is that Tesla had a very, very strong move. We saw a lot of calls being bought this first week of August, and then it sold off. Now, it didn't sell off, back down to new lows or anything super, super crazy. But what was notable here on Tesla is that it did sell off from roughly around 940 down to around 840. So about $100 move back down in just a couple of days after we saw that put call ratio get extended to the call side or really come down low, down to like 0.5. So that is what I want you to take away from the put call ratio. And of course, if you want to utilize this on TradingView, there'll be a link to TradingView down below. You don't have to pay for the full version like I do, but they have a free version and there's even a 30-day free trial. I would recommend, there's even a video you guys can go watch on the channel. We cover, our thoughts on the different plans of TradingView, depending upon your experience levels and whatnot. So you can start for free and it's very, very useful. I would highly recommend it. Again, link to that will be down below. Any questions and comments, leave them in the comment section. Like always, there'll be a link to a trading webinar covering 3 trading signals to add to your arsenal if you want to check it out. Link down below. Like always, make sure you subscribe. Let us know what you want to see in the future, and we'll see you guys in a future video. Peace.